Okay, thank you. Thank you, Thiruvan. Okay. All right, guys, let's get going. And thank you. Loud and clear, brilliant. Okay, so yes, we have actually have had a chat yesterday during the commodity session as well. Before that, just to let you guys know, welcome to Monday's week ahead, and this is today is the 5th of July 2021. We are really going through the year really fast. It's beyond half a year already. So we have lots to discuss in terms of the July week, this whole week as well, post NFP, couple of trade ideas. So this is what we will be discussing this week in our Monday's Bretton webinar. So my name is Kenny Simon, with you every Monday, Wednesdays, and Friday during the Bretton's weekly webinar. So we've got 3 times a week every week. Okay, Mondays, Wednesdays, and Fridays. So you guys can go on to bretton.institute to register on our webinars. Okay, without further ado, we have delayed you guys enough already, but I just want to take you through to a little bit of market news first, out of the chart. Always we want to start with out of the chart. I've spotted quite a number of patterns as well, which is great. Also trade ideas and trade signals, but I would love to wait a little bit until London open a little bit more. Let's say before noon my time, to just look at a few levels of prices for certain instruments, and I want to show you that on to the chart. So here, for example, when we look at, let's say daily FX is just one of those news that I just want to look at the headline, and you can see that we have got a lot of focus on, number one, oil, crude oil right here. We've talked about it. We've talked about the levels on crude oil yesterday during our Sunday session. And here it says on the headline itself, crude oil prices hit $75 as OPEC Plus meeting stalls on output hike. So I just want to translate this little sentence here in giving you a bit of an idea, a hint of what exactly they mean. Now, what they actually mean is it has got a little bit of output stalling. That means the output of oil, meaning the supply of oil, has got some issues. That means if the supply is low and the demand is high, that could probably increase the interest even more by buyers. That means prices could actually potentially go up. So we have also identified the area, the zone. So we want to match whatever we hear here together with what we can actually see onto the chart, so that we can actually plan entries and exits, and also look to the left and see whether or not we have any reversal areas, and whether or not we should actually be exiting and re-entering and things like that. Okay, so this little sentence right here has got its explanation as well, but we won't go into, reading it and all that at this moment of time. All the readings and all that should actually take place way before you decide the pairs as well, because all these readings and things that are going on outside of the chart would actually be the fuel on the fundamental side of it to actually prolong a trend or to solidify the trend. Then you need to match that up with what you see onto the chart. Then you get the right pairs to actually enter and exit the market with. So here we have got oil related. Here we've got Australian dollar, then we've got gold as well. Let's forget about this one here. We look at these three, only these three for now. So we have got Australia, loads of focus on Australia. Australia's lockdown is happening as well. But then here is talking about Australian dollar correction. So you see, if it has actually gone down, are they talking about correction to go up? So we want to also monitor that. But then in terms of instruments, we need to pay attention to oil, because they've got expectation of oil actually moving, Australian dollar as well. Now, when we talk about Australian dollar, of course, its sister currency is New Zealand dollar. So we might find New Zealand dollar as well to have some opportunity right there. And then we talk about oil, we talk about gold, the yellow oil, right? So gold, and then US as well. And here you can see that that the every time you look at a title that talks about gold, it's usually correlating it. It's correlating it with US dollar. It's correlating it with the US situation on yields, inflation, reflation. So you can see that there is a very strong correlation of gold's prices with what goes on in the United States. So this is very, very important. And you can see it very clearly, even in the way the sentences were arranged. It says rebound as the US dollar and yields fall. So then you can see that gold prices is expected to go up or is going up at the moment, mainly because of US dollar and yields, the US Treasury basically falling after strong NFP. So this one here has actually, sort of not really very clear in terms of the logic of strong NFP and then US dollar and the yields fall, you see. So that is always a shy away from looking at the news as logic. There is never logic in the news or the data release. It doesn't mean that if it's positive, it will go up and things like that. But at least we know that there is a reason for gold's rebound, meaning going up right now, and there is weakness in the US dollar and also the yields are falling. Okay, so that's good information for us to know that we are picking pairs right now, instruments based on what could actually be moved in the market by fundamental reasons. Okay, so I know that I'm not paying attention to euro, I'm not paying attention so much to CHF, GBP, all that. No, why? Because it's a different story at this moment of time. We can pay attention to GBP as well, of course, mainly because of gold prices and all that. But then what we need to do right now as well is just to get a little bit of confirmation on the top 10 by Action Forex as well. And then just to look at the heat map first, just to get a bit of an idea, because we've already got a very slight rough idea of what's going on. So this could actually be a risk-off environment that is starting because they're paying attention to gold. Are they paying attention to gold or not? Are they actually really buying gold? Are there more and more interest in buying gold? We need to look at the chart. But then before that, we need to also look at how does the whole heat map is actually playing at the moment. Now, look at USD, for example. It's sort of mixed, not very clear. I'm looking at dark red and dark blue. So you can see that dark red and dark blue are happening with GBP. Now, GBP, as I've mentioned as well, GBP or the pound is seen to actually correlate with gold quite a lot. So as you guys can see, just now we talked about gold rebounding, correct? And then we look at the heat map as well, and we need to look at the chart as well. GBP is strongly correlated with gold. And if rebound on gold is going up, then we see that GBP is also happening at the moment. And it's one of the very few currency in the heat map that basically has got more dark blues, and it's quite standard in terms of its spread of the blues, and it's quite nicely seen as well. So it's strongly bullish against the euro. So you can see that GBP euro, maybe there is an opportunity right there. So what we need to do is we need to write it down and know that we pay attention to oil. We want to look at analyzing oil a lot more, gold as well, Australian dollar, New Zealand dollar, because we're talking about gold. Its impact of gold is actually in the US. So we want to look at USD. So because we are looking at USD, it's probably best for us to look at USD crosses as well as of today. Now, if we look into GBP crosses because of gold as well, and because the heat map is actually quite clear, then we want to also take a look at GBP euro. Now, if we look at GBP, for example, we want to also look into the volatility chart. But before we look at the volatility chart, we want to also look at the top 10 top movers first, okay, just to get a bit of a rough idea. Now, what stage are we at this moment is not decision-making, buy, sell, no, nothing like that, zero. We are only at the stage of understanding the market market analysis, meaning that whether it's risk on, risk off, it looks like it's going into a risk on mode or situation at the moment, mainly because the interest of gold is going up, and then the interest on the USD and all the risky currencies is going down. So we are going through a risk on type environment. Now, with that environment of risk on type environment, the way that we need to also look at is trend analysis. So when we look at market analysis as a whole, we can then look at the trend analysis, meaning that, okay, whether or not gold is beginning to have an uptrend, and how do we do that? We need to look at the chart as well to look at different time frames, and that's called trend analysis. Once you complete your market analysis, then you can actually start choosing your pair. Then we go on to trend analysis, then only then we go on to technical analysis. Then we go into entry and exit and put all the stop loss and everything else and start trading pending order or spot order. That's the sort of rough route map that we need to take all the time when we are actually trading. So here, for example, we can see on the top 10 itself, the interest is on the GBP. We've got lots of GBP. First three is on GBP. Now, GBP, CHF, GBP, CAD, and GBP, NZD. So we see that GBP is actually on the buy. In most of the GBP crosses, GBP is actually on the buy. Now, GBP, AUD also a buy. So that does actually confirm AUD's weakness, still on the weak side, okay, because of all the lockdown and the Delta variant that is going on in Australia is really, really bad. And also what's surprising is the vaccination rate in terms of percentage in Australia is so low as 6%. And that is quite unbelievable. Actually, it's quite shocking as well to know that number is so low, considering our expectation of Australia being a very modern type country, really high tech, really good in its economy, very strong and everything else. And it's only about 6% also vaccination rate. And now they go on to total lockdown. So I'm not sure whether or not this is actually a game as well, because, in politics, everything can actually happen. They can actually make it worse than it is, just to lower down the currency as well, because we are in an era that currency war can actually happen. So currency war can actually happen, with governments planning all kind of stuff, and then to actually lower down the currency rate. So it's very difficult to believe that. But then, like now, even in Malaysia and a couple of other countries, we can see that that is actually happening. I mean, we've got the worst situation in Malaysia, for example, with all these cases and things like that. But behind the scene, when you look into the stock market and you look at the pharmaceutical sector, a lot of them are actually celebrating. They're actually laughing as well. They're actually celebrating because their shares are just going skyrocket high. And do we think that the government has got nothing to do with it? No, because all the pharmaceuticals have got its taxes and contribution to the government as well. As good as it does, it will, I mean, the better it does in terms of its share prices and everything else, it would also benefit the government, benefit its shareholders. And who are these shareholders? The shareholders are also government people, together with very big elite entrepreneurs and business people inside the country. So that has always happened in that way. So, it's not all gloom only when it comes to downside. There are people benefiting it big time as well. So all these new vaccinations as well are actually, if you look behind the scene, the pharmaceutical companies are actually competing with one another on its share prices, depending on its success on the vaccination as well. So it's business as well, you see. So that's the ugly truth behind the business world, the very aggressive business world. So here we can see that in the top movers as well, because of gold situation, because of an expectation of the rise of gold, meaning more risk on type environment, there may be opportunities to trade GBP. Whether it's a downside, upside, we don't know, because we need to only know the upside, downside once we go onto the chart and we do a bit of a trend analysis through various time frames, and then we study and look into each one cross of the GBP. So we cannot really say GBP is up and GBP is up on across all the crosses. No, we cannot do that because it works dynamically or differently against each currency. Okay, so GBP CAD seems to be quite clear in trend. We want to take a look at GBP Canadian dollar as well. Want to look at what's going on, but then the first three would probably be nice to actually focus on in the trend analysis, so we can actually visit together onto the chart and then we start getting trade ideas. Okay, so major pairs is good. AUD crosses is probably good. When I say good, it's not good to go and just trade it right now. No, it's good to go and do more analysis on the trend analysis first. Unfortunately, that's the best way to actually treat trading, is by knowing what you need to do in the shortest time period of time, but then you need to do it in sequence, step by step. And that is basically your trade plan in action. If you do all these things, then you are actually going through a practical trade plan, you know, a checklist of things that needs to be done. But we need to pick the right pair for the day and then understand the trend and then decide what you need to do, whether to enter, buy, sell, do a pending order, or not to enter at all. They are all valid decisions that needs to be made. Okay, so this is basically it. Hope you guys get a bit of an idea right now of which pair would probably be good to sort of focus on. Also, we go into the volatility chart and get a bit of an idea. Let's look at USD first, okay, and look at which other currency would be best to combine the USD with major pairs would be nice. Okay, so here very clearly AUD USD. Okay, so AUD very volatile against the USD. We've got CHF next, so USD CHF. We've got quite a number of majors to look at, which is great. So GBP is also one of it, not as good as the rest, but then it's still in that list of high volatility. So we have got Euro, NZD, AUD, CAD, CHF, not so much with JPY. So you know now that you have got these ones to actually focus on as part of your analysis, trend analysis, to make sure. So these are your major pairs, okay? Euro USD, NZD USD, AUD USD, USD CAD, and USD CHF, to actually just look at these pairs when we come onto the chart to look at whether or not the trend is really clear above all the three lines, under all the three lines, across all the time frames. Look left with mother candles as well, and then we plan further. Okay, good. So that's basically on the USD. Now we want to also look at GBP. Now, when you look at GBP seem to be very limited in the currency that it is very volatile again. So that's very clear. GBP USD is most volatile. So we want to look at GBP USD for sure. What about AUD? Let's look at AUD. Now, AUD is also quite concentrated on USD in terms of volatility. So that should give you guys an idea that major pairs is quite good to look at today. Okay, major pairs. That means pairs that have got USD in it. And what else do we look at? Let's see. Euro, just upon curiosity. Also USD. So there you go, major pairs. So now, before we get onto the chart, I want to very quickly look into, I think, yes, we've got it up and running onto the calendar here, and we can see that we've got volatility expected for AUD because of the rate ones are your high volatility or high impact type data. So we've got Australian dollar right there would probably be impacted. It's one of those currencies to choose at as well as of today because of what's going on in Australia, and then we have got data with that. Now tomorrow seem to be very active in terms of data, but also very active in terms of creating momentum and volatility, because it still revolves around Australia, loads of Australian data. So I think Australia versus the USD, Australia versus other pairs, we need to actually take a look as well to actually look at whether or not we can actually jump into getting some trade ideas also with Euro tomorrow, as well as USD industrial averages. Okay, so let's also look at the whole week. Wednesday, we've got some data, but don't have so much sort of impact by majority of other currencies or other countries except for the US, because we've got the FOMC minutes of the US on Wednesday. And then we look at Thursday. Thursday, not too bad, but then again, it revolves Australia as being high impact news. So I think Australia would probably be Australian dollar crosses and New Zealand dollar crosses would still be in my mind to actually just take a look at opportunities right there, because we've got lots of data, we've got a lot of things, risk events are happening in Australia itself, and it will pull in New Zealand dollar with it as well. So that's basically why I think it would be good for us to monitor Australian crosses as well. Now, also consumer price index on Friday for China, that again will be a big impact on Australia. Okay, so all these Chinese sort of data would actually be directly related to Australia as well, so the Australian dollar again. So I think this whole week would actually see a lot of movement for the Australian dollar crosses. And then we get Friday closing the week with Canadian high impact news. So then we might be able to see Canadian dollar starting to move Thursday night itself. Okay, so there you go. This is a rough idea in terms of events, data releases, and which pair or which country would actually expect their currencies to actually move quite a bit. So that's your whole week's sort of agenda right there. Okay. So with that, I want to now move into this chart. Okay, so because we are on the oil yesterday, let's just talk about oil a little bit first. There's not much changes, as we can see. It is still within, this is the weekly chart, of course, it's within the buy zone. Okay, so it is still giving a lot of ideas to the upside. So as long as you are buying within the zone, and you can buy anytime within the zone, it is still looking really good with buying opportunity, together with whatever we have seen in terms of the news as well, encouraging more price to the upside. I'm just weary of this level right here. It's already gone past the 74.40. You need it to go past 74.50 so that your fresh buy price could actually be at 74.60 for US oil for WTI. Okay, so you can actually buy at 74.60, and then you can actually exit at 74.90. This is your sort of short term. We are playing with psychological numbers as well for the price action of oil, WTI. So once again, you can actually do a pending order at 74.60, and then you can actually take profit, exit at 74.90. Okay, so that is for oil, WTI. We want to be careful, still being careful within the buy zone. Okay, now, since I've got gold right here as well, let's take a look at gold, and let's look at whether or not this bounce is actually happening. So it looks like the bounce is definitely happening. We have got it on, let's say now on the 4-hour chart. I see that the candle is moving. Mother candle, bullish mother candle is moving. The price at the moment is at 1790.40 area, and it is sort of very close into piercing through this area of 1791.73, which is the border, the lower border of this whole buy zone. So once it actually gone up and pierce through this area, I want traders not to be overly excited as well yet, mainly because we need a bit of confirmation. We need it to give us a nice green light to actually start buying gold, and not get excited and say it's an uptrend, it's a downtrend. it's better not to work this way, because we need, there's a lot of factors to actually consider whether it is a strong downtrend or a strong uptrend. So what I would prefer doing is, once it does actually pierce through, I want to look at it, how it reacts in this area. See this area right here? It's really powerful resistance area made up by these mother candles right here, both bullish and bearish mother candle. But then if you look left again, you have got a very significant resistance made up by a bearish mother candle right here. So this level is where I would see it as a real test for gold to actually go above or not go above 1794.33. Okay, so most of the traders, what they will actually do is that, because I've talked about this blue zone being a buy zone, the moment it goes in, you want to actually buy. You can do that as well, but that is actually a very risky move, because if we are following a sort of structure, a standard operating procedure, then we don't really use our emotions to make the decision. We actually use logical action plan. So here, one of the action plan is to consider whether or not to the left we have resistance. Now, to the left, we have very strong resistance. So in other words, in order for you to actually be safe and trade, systematically, it's probably best for you to wait until price go above 1794. So let's say if you want to put a pending order on gold, on a buy order, it's probably better at 1795, let's say. So 1795, your pending order buy, then it would actually be a little bit safer. Then you know that the momentum has picked up. You know that the news and the fundamental areas have actually matured and ripened enough to actually solidify the trend for gold. For now, yes, it's picking up, but I'm not getting very excited yet because of these boys right here. Okay, so I hope that is clear for you guys. Okay, it's a very clear action plan to actually just wait until it pierces through 1794.33, then your buy pending order can actually be at 1795. Now, as you go upwards, you need to also go, as the price goes upwards, let's say it pierces through 1794, it triggers your 1795 buy order. Where do you actually exit? Very, very important, right? So then when I was in the 4-hour chart, I couldn't actually see any candles, any buy bullish type candles. So I didn't actually have a reference point of where I can exit. Hence the reason I needed to actually go onto the daily chart. So once I go into the daily chart, then I can see, oh, this is where I could roughly exit the end of that bullish candle right there. So the end, meaning the closing price of that bullish candle, pointed me out to 1813.98. So just to make it really simple, you can enter at 1795, and then you can exit, take profit at 1810. Okay, so 1810, you just get out. Or if you want to be a little bit safer, we consider this area right here. And that was at 18, yeah, it's the same, 1809.86. So I would say 1810. So again, we can actually go over the price trade signal right here for gold is to do a pending order at buy at 1795, exit at 1810. Simple and easy. And we have actually seen that there is a big possibility of that happening, but only after it goes upwards. So at this moment of time, maybe a little bit early as well for the fundamentals to come in a lot more, because US hasn't opened. London is just about to open as well. So we need all these news to come in and solidify the trend for the US as well. So that would give us more time. And if that does actually happen to solidify the trend of the USD going down, let's say some more negative news and stuff like that during the next 1 or 2 hours, then we can see the possibility of gold going upwards and penetrating, piercing through the price that we have expected it to pierce through, which is 1794.33, and then to have the possibility of triggering our price at 1795. I hope that's clear for gold. You guys okay so far with gold? All clear? Yep. Okay, guys, right? Okay, so let's take a look at GBP crosses, especially GBP Jpy. All right, brilliant. Thank you, Mr. Conan. Okay, so we go on to GBP Jpy. Is it GBP Jpy? Yes. Or GBP NZD. Yeah, GBP NZD, GBP Jpy. These are the pairs. Brilliant. Thank you. Okay, so we have got GBP NZD, for example. I want to show you this because we have been riding on the upside due to this bullish geometric ABCD pattern right here. So the geometric ABCD pattern, very, very clear. We have seen that it's got all this potential to go up. I've also laid out on GBP NZD all the resistant areas. So for you to actually exit at all these lines. So you buy and you exit at all this line right here, and then you re-enter again, and then you aim at all these lines as you take profits right here. So exit instead of take profit, you can actually take profit exactly on the lines or just before it, under it as well. Is entirely up to you. Now we're looking at the GBP NZD on the daily chart as well. So how do I see it? I see that it's got more room to the upside, GBP. GBP seem to be picking up as well quite well with the trend. A lot of GBP buying going on at this moment of time. But in terms of trend, this is where we are on the chart doing trend analysis now. And we can actually see that most of the prices, current prices at the moment, current candles as well, cluster of candles, they're all above the the 9680 area, which is a good sign. So it is now at 1.9698. But the thing is that it is approaching the 9700. Now, I want to also point out this area of resistance at the B point. Now, whenever we draw the ABCD pattern, let's say, right, we want to also look at the B point as resistance. And usually, if it is a good enough pattern, solid enough pattern, meaning that it's got a very good ratio on the C point right here. For example, here, if I were to pull this one up, I can see that my C point is exactly on the dot at 50%. So I would expect the price could actually go up to about 200% because of the table that I have shared with you guys on the ratio. If you know the C point, you could roughly use Fibonacci retracement ratio to look at where it could actually reach in terms of the Fibonacci extension ratio. So that means if I pull this one here from B to C, I can look at my 200%, which is right up there, but we are not really focusing on that high. We want to take it stage by stage. So at this moment of time, because the price is actually picking up right now, not very badly, quite well, we want to also take a look at the risk area. So there are some risk area at the moment at 9750s area, because when I draw the line at the C point here, not on the wick, but on the highest body as well, I see that it pointed out to 1.9745, which basically means very close to 9750 area. So whatever you do right now with GBP and ZD, if you are buying right now, make sure you exit at 9740. Okay. So once you have sorry, is it 9740? Yes, correct. 9740, which is 10 pips under 9750. So make sure you exit at 9740 if you are buying right now. If you're not yet buying, you can choose to buy now and exit at 9740, or you can choose to buy later, which is basically after it has crossed over the B point roughly, and you can enter at 9760. If you enter at 1.9760 for the buy for GBP and ZD, make sure you exit, or your take profit price is at 1.9790. That's another 30 pips right there. Okay. And then once you take profit there, then we plan again further on entering where, and then go in and take it in stages. 30 pips, 20, 30 pips, 20, 30 pips, 20, 30 pips. We've got a long way to go. This entire area right here from the price, current price now to the end of this blue area is about 600 plus pips potential. We want to take little by little by little by little. I know you may see it as, oh, just 20 pips, 30 pips out of 600 plus pips. No, we cannot see it like that. Yes, you got 600 plus pips, but what is the net pips that you can get is very different from what is gross, right? What is gross is gross. It's like in business, when you actually make money, let's say you're selling ice cream and then you get a profit for the month at $600. That $600 is not your it's gross, is your revenue, right? But it's not your net profit. So you have to take it all away with all your expenses. What is left, the net, is what you consider as your money, right? After you pay off all the expenses and the everything else that needs to be paid for, then you get that amount that is your real amount of your hard work. So this is the same here with any pairs, any instruments in Forex trading. Is the same thing. You don't want to look at just the potential of the entire thing in terms of the number of pips or that you can make and things like that, because the market is very brutal. The market will give you what it wants to give you. And we can do only our best, and we see what the market can actually give. And if we are at the right time, right direction, we will get what we are meant to receive in terms of pips, profits, and everything, including losses as well. If we are meant to actually receive the losses at the time, we will receive the losses, right? So that is basically it. Okay, two sides of the coin always. So now GBP and ZD, this is basically what's happening. And that is my short-term type trade signal that I can give you right there, 9760 to buy and exit 1.9790. Okay, if you're buying now, as I've mentioned, make sure you exit at 1.9740. Okay, but overall, it's looking quite bullish. It is still has got a lot of potential to actually mirror this big movement of mother candle right here, which is 600 plus pips worth. And this is what we are riding on a bullish geometric ABCD pattern to take it in stages to actually have our TP hit. Okay, that's GBP and ZD. Now we've mentioned about GBP as well with regards to being bullish, and also major pairs, which basically means against the USD. So we're going to take a look as well at GBP USD, and then we'll take a look at AUD USD as well. Okay. All right. So here, for example, GBP is known to be bullish, but whether it's bullish against USD as well, is it bearish? Is it bullish? Mainly, it does actually depend on the current situation with USD as well. So I just want to take a look and look at what's going on here. Okay. Now, if I'm on the weekly chart, I can see very clearly that the upside move is sort of blocked here. Okay, this is a very obvious resistant area with a very long wick to the very top. You won't be able to see this in the shorter time frame, but on the long term, in the weekly chart, you can see straight away that there is a limit of GBP, no matter what, to go up. Too much. So it has the possibility, if it wants to, if the market lets it, to actually go up. It has a 170 plus pips potential only to go up, but that's gross number of pips. Maybe it's less, we don't know, but then at least we know we cannot get overly excited with GBP going up, even if it shows you that GBP is going up and up and up. But GBP against USD at this moment has got a limit. I'll push it down a little bit to respect this mother candle right here. Okay, so the closing price was at 3980 exactly on the dot. So what does that actually mean? No matter what you do, if you are buying the GBP and you are leaving it open and whatever that is, you need to exit at 3970. Okay, so let's put the border right there so that you know that that is your limit. Okay, 3970. Okay, that's the whole big picture because it's on the bigger time frame, right? So right now we have got GBP USD trading at 1.3834. Now 34, as it goes up and up and up, it will hit and bump into the 3850 psychological number. So in other words, I would prefer to actually start buying only at 3860. So again, I will put in the price that I can see to actually buy at a safer level is at 3860. Okay, 3860. There you go. Now, We have 3860 right here and 3970. So what is the net pip potential? Not 270 plus anymore. It is only at 108. Let's say 100 only. So I only look at 100 potential, 100 pips, not 170 anymore and all that, because we have minus all the potential risk as well. So this is the area that I will look at, my buy zone, my buy area potentially. Then now what I do is go on to the lower time frame, going lower and lower, and look at the potential. Okay, so this is the buy area right here, right? Now we are on the daily chart. Has the price gone into it? Not yet. So you can do a pending order at 1.3860. You can then do a exit take profit level at 1.3970. So this is the area that we want to look at, the location, location, location. Now, when I go on to the daily chart, what I can see very, very obvious as well is this area right here. The buying of a bullish candle also started here at 3879 area as well. Now, this is a support area, okay, a support of a mother candle, which also could be a resistance, meaning that if you start buying at the 3860, there may be only a potential of price sort of reversing there. If it doesn't reverse there, of course, it'll go stronger and it might actually reverse here. Okay, so this should actually be your exit area as well for your short term, because what we are doing right now is we found the area that we can trade in 100 pips potential. Now we are going into the smaller time frame, going one level down to actually find out how we can trade it in stages, 30 pips, 40 pips, whatever that is giving us potentially. Now it's giving us this area of resistance potentially right here, okay, and that is at 38.95. So if we were to exit, if we are at 38.60, 38.90, we should exit anyway, respecting this area. So I'll adjust this one to 38.90. Okay. Now you have got a trade signal right here. That means your 30 pips action plan could actually begin at 38.60 and then you want to exit at 38.90. Okay, 38.90. So you can re-enter again. Let me do can re-enter again later on to take another 30 pips or 40 pips or something like that at let's say 38.39.10. So 39.10, you can buy again, re-enter second time. Okay, I put that as your blue, 39.10, right? So 39.10, do we actually have areas of resistance? Yes, got an area of resistance right there as well. So this is quite a powerful area of resistance right here, okay? So you need to exit 39.10, 39.40, you can exit. That's another 30 pips right there. So I'll put that as red line. Okay. This is Gbp USD we're talking about, okay? All right. So here I will change the color as well. You buy with the blue. Okay, take profit in the red. Exit with the red. There we go. Now it's clearer, right? So you have got two trade ideas right here. Your first entry, pending buy entry 38.60, exit the TP1 38.90. Second entry 1.3910, and then your TP2 at 1.3940. Okay. We'll leave that at 38, okay? 39.38, because we have to respect this area right here, okay? The bearish opening price of that bearish candle. There you go, guys. Gbp USD. Is that clear? Yeah. You guys okay? Now, 3960. So your next entry to actually buy is at 3960, your third entry, if possible. But the problem is that you will be exiting at 3970. So that's only 10 pips. So you decide whether you want that 10 pips or not. For me, it's not worth it. there. So I will not consider a third entry. I'll only consider 1 and 2. And there's 30 pips, 30 pips. Okay, so is that clear? GBP USD, this is on pending orders. All right, hope you guys are clear with that on GBP USD. GBP JPY, let's talk about GBP JPY. Now, GBP JPY is quite clear. I've already put in everything that needs to be done in terms of your buy zone and your rate selling zone as well. We have got all the selling and buying pending order already given it to you as well. If it is on the buy, basically 154.10 onwards, you can actually start buying. Not 154.60 is later, but if you want earlier, as the market pushes the price for GBP, if it does, to the upside, then you can start buying at 154.10. Then you want to exit at 154.40. That's 30 pips. So that's your immediate one there. And then you can take this one later on for your second entry, but not yet. At this moment of time, we need some confirmation of GBP versus the JPY. How strong is the GBP versus the JPY? Is it going to mirror the bullish trend for all the other crosses of GBP with the JPY, or is it actually going to be weaker than the JPY? If it does, or somehow, some reason, weaker than the JPY, then start entering into this area, then your sell price will actually be at 153.10. So 153.10, and then you take profit 152.30. That is just the area right there. So I'm still floating on the GBP JPY at this moment of time. I see a potential for it to also come down. I see potential of JPY increasing as well. So we just want to be careful with this. As I've mentioned as well, this is a sort of difficult situation with GBP JPY, a trap right there. But then I'm not cutting my loss as yet, mainly because of my conviction of this area right here. Also because of the JPY's role as safe haven is still going on as well, with all the increasing of COVID-19 situation, as well as the new variant, Delta variant as well. So there are reasons to believe. But then let's look at what happens. If it does actually goes a little bit too much, then my stop loss would actually been hit anyway. So that's basically it. Okay. All right, guys. Any questions at all so far? Any pairs you want to take a look at for now? Any questions? Okay. Hope the Wi-Fi, it looks like it's got some interruption again. Okay, give me a second. No, it's okay. AUD USD. Okay, good. Let's take a look at AUD USD. I'll just get rid of all this first. Now, as we know, fundamentally, it's going through loads of sort of negativity in terms of bad news, the Delta variant and lockdown and everything else. But then the news today also talks about correction. Now, as we are on the daily chart for AUD USD, what can we actually notice? We see that the price, we look to the right on the price, which is 75.19 or 75.20, is exactly at the psychological level. Okay, so that means it could reverse at any moment of time. And also we have the 200 EMA right here, which could actually be a resistance level as well. So are we talking about this support area basically going to be turning into a resistant area? So let's say, yes, the potential is it will reverse. Let's say if it decides to reverse, it reverses. And where would it actually find support? Number one, it could find support right here. Okay, this is where you could find support. Now I'll color that blue. Okay. Okay, so we've got blue right here, And as it goes lower, if it does go lower, another strong support on the daily chart is this one here. I push this a little bit on the upside just to have it right there. Okay, so then we have 74.80, exactly at 74.80 to be your psychological level as support. Also, this price right here is very close to 74.50 psychological level. Okay, so I'll adjust that to 74.50. Okay, there you go. And this one here, 74.80 as it is. Okay, so we have got these two areas as area of support. So it might find support, but what it needs to do is that in order for it to actually give you the conviction that it wants to go up and it has areas to go up, then we need it to go beyond 75.20 at 75.30. But there is another problem as well. Here is not a problem, but another hint is that we have head and shoulder pattern. This is your shoulder number one. Okay, this is your shoulder number two. So this is your head, not shoulder. And then this is your shoulder number two. Okay, so we have a head and shoulders pattern, which usually signifies or hints more price fall, not up. So maybe whatever that is happening right here could potentially be a correction. Okay, so we also have A here, B here, C here as a potential ABCD bearish pattern as well. So if we pull this one down here, copy that there, we can see that the fall is expected to be around this area as well. Okay, for this pattern. So that basically means that there is a potential downward movement, a bit of correction, but then as it breaks the neckline of this pattern, I think further fall could actually happen. Now, let's see, maybe another support around here. So I'll move this one just a little bit here. And again, there. So all these blue lines are actually potential support. But then as it breaks down and go lower than 74.00 and under, I think then it will actually be a very, very big fall. So what I would say about AUD USD is that it has limited corrective move to the upside, but more expectation for further fall to the downside only if it does actually pierce through and go under 74.00 area. So 74.00 is your psychological level. Okay, so if we go on to the weekly chart, okay, you can see that yes, there are some areas of selling right here, but then a little bit lower as well. You've got more selling, more selling, more selling. And if you go into the monthly chart, you can see a big, huge selling after that area right there. So not yet, but then we want to wait and see what happens with the upward type movement. If it does actually go up, there's some levels, limited area of support as well. I would think it's this area right here. And if you put it in red, that's your resistance area limit, but that's based on the monthly chart. Okay, 79, yeah, 79.50 and below 79.40, you need to exit already, but that's way up, 500 plus over pips to the upside, but we don't know whether that could actually happen. But for now, it's probably best to look at some buying, but not too much, because we've got resistance area right there. It's trading at 75.20 area, not good actually. So 75.30 would actually be better buying price. If you buy at 75.30, then we'll take a look later on whether or not it's worth, but at this moment of time, it's not worth to buy or to sell for Australian dollar. We need more conviction because of this pattern as well. It looks like it wants to sell at a higher price, so it wants to correct but then the fall will actually be very, very big, okay? Because if this were to be a head and shoulder pattern, which it does look like it is a head and shoulder pattern, it needs to cut through all these four lines and go under 7400. Then we will see that it has broken the neckline of this pattern. Then you've got a big, big fall to actually expect. And I feel it'd probably be better for me to write a downtrend of the AUD USD rather than an uptrend at the moment, because the uptrend is just corrective move as well. And also with what is going on in Australia, I think if it lasts longer and it takes time to actually repair all the situation in Australia as well. So I think further fall may actually be expected. Also, they have talked a little bit about lowering interest rate to encourage the economy and things like that. So that does actually give us the hint that there's more plan to lower the rate and lower the currency. So then the currency would actually drop as opposed to go up too much, too far. Okay. All right. Is that good for Australian dollar at this moment of time? Tiru, okay. XPT is platinum, if I'm not mistaken as well. This one here is platinum. Yeah, platinum versus the US dollar. Not really much of interest at this moment of time. It's just that more interest and focus is done onto oil and also gold at this moment of time, but it does actually sort of follow through gold in a way. So it is actually going up at this moment of time, and you can do the same thing looking to the left and looking at the power of bullish mother candle and treat it that way. Look at higher time frame first and then go down to lower time frame to aim at smaller pips as well and trade in stages. You can do the same thing. Yeah. Okay, so that's for platinum. Okay, guys, any questions at all? If no more questions, we'll end the session for today. You've got some to play with in terms of putting your pending order and things like that while you monitor the market, while I monitor the market as well to look at London Open and later on the US Open as well. Any questions so far? All good? Okay, brilliant. Okay, guys, if all good, then we want to, I'll end the session and monitor the market. And thank you, Thiru. Take care. Okay, so I hope you guys, Skype up some pips for the whole week and for today especially as well. And any questions, just ask me in any possible way that you can reach me. Just ask, and I'll be happy to help. So happy geometric pipping to all of you, and a good pipping week as well to all. Okay, and thank you for your patience and attending my webinar today. Okay, guys, take care. Thank you very much, and have a good week. Bye bye.